Bam. Good news.
Yes.
Recording in progress. We're live. Welcome to Canadian politics with Scott and Ben.
It's a touchy subject.
Hey, we're in the thick of it. You can tell by the number of signs going up on people's lawns, as people may have heard you mention.
Yes.
So we are going to touch on that today, but happy Friday. 40 degrees out, going to be an absolute scorcher this weekend.
My favorite.
I know. Yeah, you're going to be out running at like 3 p.m. In the afternoon.
Yeah, definitely.
Oh, this is your Ironman anniversary day today, weekend.
It is. You're right.
3 years.
3 years ago today, fittest shape of my life.
Yeah, Facebook reminded me of that. You look thin, like you're a skinny guy to begin with, but you look like
it's fit,
lean. I know.
Miss those days.
That's what fitness really looks like. Yeah, that's crazy.
That's right.
I haven't seen that since 2003. So.
We're bringing it back. We're bringing everything old back.
Exactly. That's what I say. That's how I keep the wrinkles away. I just keep it filled out, right? Just keep stretch them out. That's the way to do it. Okay, so Friday afternoon, what is it, August 20th? We're winded down here. You know, I can know because when I'm out taking the kids to baseball and soccer and stuff like that, it's getting darker earlier and earlier.
Me too.
Typically kind of a quiet time in business and the markets, but there's things happening. There's still things happening right now.
Yeah.
Why don't you give us an overview of this, whatever happened this week? Start like that.
Yeah, so I think that's a fair point. We had a pretty choppy week in the markets this week. Reasonable start to the week, and then everybody was focused on the Fed taper discussions on Wednesday. So the minutes came out from the July Fed meeting, and so the markets reacted to that pretty dramatically. I guess Wednesday, Thursday. Today markets closed green, but a lot of discussion. There was somebody from one of the Fed. Bullard, Fed Bullard, Chair Bullard. Do you like Bullard?
That's funny.
He's a non-voting member, so that's important because his comments mean a lot less. But he said that he suggests the taper, and I know maybe we should clarify what the taper is. Right now, the central bank is buying $120 billion of bonds in the U.S. every month, so that would be mortgage bonds, corporate bonds, treasury bonds. So they're buying 120 billion worth every month, and Bullard suggested that they should completely stop in Q1 of next year, which sounds like a great idea. It's ridiculous because it'll never happen. But the market seemed to be a bit spooked from that. If you actually read the minutes, they said there was only a small fraction of the people that suggested the taper would stop next year. Most suggested it would happen potentially in the second half of next year when they start to taper. So what that means is if they stop buying bonds, interest rates could potentially go up. And last time this happened was 2013 when Bernanke tried to taper. This is a famous taper tantrum. Yields spiked. Markets sold off. All risk assets sold off pretty dramatically, kind of that 15%-ish to 20% downside. So I think Powell now, and I wrote a post on LinkedIn, if you follow me on there today, about the to taper or not to taper. But
very poetic, Ben.
What wasn't it?
Yeah, it was actually. It was quite entertaining for sure.
So that's what all the talk's been about. Is he going to do this? Is this going to happen again? I don't really think they're going to be able to taper. They may try, but then they'll have to go back to stimulate the market if they want the economy to go on. So we had a bit of a shake this week. And so part of my thoughts around what was happening, we saw gold sell off a little bit as well. And the gold miners have been really challenging. And when I look at the metrics, I mean, the free cash flow on gold miners are the best they've ever been in history. A lot of these companies have started paying dividends. Their profitability at 1,700 gold is amazing. So when you look at the economic setup, which is slowing growth and rising inflation, historically, that's been the best backdrop for gold. So from a risk reward perspective, I think it's been great. But this week we had a bit of a shock with the taper. As a result, we had super strong US dollar against kind of every other asset class. And when the US dollar is extremely strong, it puts pressure on gold. So I think if we see a moderation in the dollar, we should see some strength in gold in the next couple of weeks to months. So
Gotcha.
that was a bit of a mouthful, but that was it that I saw this week.
Yeah, no, that was good. Yeah, if anybody on here is on LinkedIn, definitely check out that post that Ben put out there today. It was pretty interesting. Okay, like always, if you have any questions or anything in the bar down below, you can put it in the Q&A. You can type it in. You can raise your hand. We'll let you do an audio one, or you can just put in the chat feature. Either way, what do you want to do next? You want to talk about what you did in the portfolios?
Sure. It was bit of a continuing to be more of a quiet week. A lot of the changes I made over the past, I'd say, month or so, I've been staying with. A few adjustments here. I'd sold South Korea because it looked like it's breaking down and continues to break down. So switch that to tech XLK. So tech tends to do decent in this period as well of rising inflation, slowing growth. Utilities, REITs, those continue to be decent performers. So if anything, just some small tinkering this week. As I look across the board, what were the best performing asset class this week? It was bonds and Ethereum. So those are in portfolios. So happy to see those pick up as well. The US dollar was strong, so that was a positive as well this week. So that's about it. Excuse me, from adjustments to the portfolio this week. And just a comment on that before we go on to the next section is had lots of great conversations with clients this week. But one of the things we've talked about quite a few times on this call and in the podcast is kind of the three timeframes that I look at: 3 to 6 months, 6 to 18, 18 plus. And so where a lot of this activity comes from is that what's happening in 3 to 6 months, where we put a position like ARCF, which is Kathy Wood's finance fund, that'd be an 18 plus year or 18 plus month position that'll go in there, that'll add to. Very unlikely that I would exit it materially at any point. Where these changes were South Korea to tech, like these would be the 3 to 6 month window kind of transactions I'd be doing.
Gotcha.
Yeah.
Gotcha.
Yeah.
Yeah, nice to see crypto still on the comeback there.
Yeah, for sure. Yeah, a lot of that, I mean, all that leverage came out when the market sold off hard there over those couple of weeks. And so now we've seen it kind of more, this is much more of a fundamental move. We continue to see Ethereum used in most of these NFTs and smart contracts. So we continue to see a lift in Ethereum. And so that's been good to see.
Yeah, for sure.
Yeah.
I'll dive right into a question we have already from Malcolm. Do your comments about gold and gold stocks also apply to silver and silver stocks? Do they react the same way to events and rates, etc.?
Yeah, so it's a good question. Gold tends to be the best performer in this area. Silver would come along as well. You wouldn't necessarily have the same stability that you get from gold, but also you get, when the market starts to move, if gold's up one, you tend to going to get 1.5 to 2 on silver. So yes, that would apply as well. Some of the names that I bought over the last month, there was a couple of names in there, Coeur d'Alene and Hecla. So you wouldn't take as big a position in them, but I think you get a better risk reward from them.
Gotcha.
Yeah.
Okay, before we move on to look ahead to next week, let's just talk about something. Question I had actually about, you see all these the big news about Afghanistan and those type of major world events. Did it, or it didn't seem to, but maybe you can correct me if I'm wrong, didn't really seem to have any kind of major effect on the market though.
Yeah, so that's it's been a sad event. I mean, it's been 20 years of Afghani war has been 20 years. You know,
Mhm.
US spent $2 trillion to come in there and try to support the country. It's sad how that's played out. I think it materially impacts Biden's presidency. So that's something to take into account, but that's a little bit longer duration to think about. But from a market perspective, nothing really. A material kinetic war, I think, is something that the market would really be scared about. It seems like since nobody really stepped in aggressively as the Taliban took over, that's why the market didn't react in one way or another. Had you seen a concerted effort to step in and I guess gain control on the ground again, you probably would have seen a bigger reaction. But at this point, I think the world just kind of said, yeah, we kind of understand how this has played out, and doesn't look like it's something we can win right now. So very sad for the people, but from a market perspective, nothing material.
Gotcha.
Yep.
Okay. What else we have? Anything else in the headlines that really grabbed your attention this week, Ben?
Besides the Trudeau comments, we're going to talk about that one.
Yes, we're going to talk about that one. So let's just talk about that. Trudeau, like I said at the opening, if anybody here was on that when I said in the opening, welcome to Canadian Politics with Scott and Ben. Since we're in the election, we'll probably talk about that just about every week. But I guess he had some comments on the monetary policy this week.
Yes.
Maybe you can recap what those were exactly, and then comment on it.
Yeah, someone asked him a question about monetary policy. Obviously, if you saw a little bit of my daily today, I put up a chart that showed which developed countries had the biggest debt load. And Japan was number one and China was number two. So someone had asked Trudeau what he thought about monetary policy, and he kind of dismissed it as something not important to think about. So, I mean, the fiscal conservatives in kind of all parties, I guess, seem to get pretty upset about it. He just kind of said, I think about families, and monetary policy is not important. So it's probably going to win him some votes, but it kind of gives you a sense of what happens likely if he wins again, which I think is a high probability at this point, that they'll continue to spend dramatically and not think about where those tax or revenue dollars are going to come from. So he dismissed it as something not important, which certainly upset a lot of people that think about trying to balance the budget, so to speak.
For sure.
Yeah.
For sure.
Yeah.
I'm sure we're gonna have questions or comments on that one. Come on, from the group there. Somebody must have something to say. Oh yeah, just also the Q&A in the comment section is not just for questions, right? If you want to comment on something like specifically for Ben, like Ben, you don't know what you're talking about, really give it to him if you don't agree with him. Way up. We'll read that live on air, no problem. Yeah, interesting. That I think those types of conversations are just going to heat up as we get going here, right?
Yeah, I would think so. I mean, the other thing that's kind of come to attention a bit here from a voting perspective is looks like mail-in ballots are going to be higher this time. I mean, that was an issue in the US, but it appears that it may happen in Canada as well. The thinking around that is you get more rural mail-in ballots. More rural tends to vote conservatively, so that could potentially sway the outcome. Early days ahead, obviously we're a month out today from the election, so we'll see how that plays out. Lots to pay attention to before we get to the end of this.
Yeah, for sure.
Yeah.
Okay, let's jump into what you're looking ahead to for next week.
So it looks like this will be the next week's the last week of August. So I think that's kind of will be the end of the low volume type that we've seen over the last few weeks, where lots of noise happening in the world, but the volumes were quite low. So tend to be a sign to say what happens next. I put a few comments in the daily today. It's kind of a strange setup. We got markets at these elevated levels. Like the numbers are really extended, yet you have also a significant amount of put buying really tight to the market. So you get institutions kind of saying, we don't know either. and markets are elevated, lots of liquidity. So instinctively, you'd think that the markets are going to go lower because of a lot of the economic setup we have here. The likelihood, though, is if this plays out, we probably get one more push higher in broad equities. So continue to look at how to participate in that. But I think we're getting close to that move where we start to see both inflation and growth decelerate together. And it's probably still a few weeks out, but I'm going to continue to look at that. What's the put call ratio look like? What's the, as that starts to alleviate, then maybe there's more likelihood that markets go lower. But right now, I think we're kind of a 3 to 5% downside before we get to the other side of the serious correction that I'm expecting later this year.
Right.
Yep.
Okay. Awesome. Any more questions from anybody as we just wait, see if anybody wants anything answered or has any comments before we finish up here? Any final thoughts?
Yeah, the one thing that's had a material impact this week has been the US dollar. Most of my questions that I've had from people is, where is the dollar going? We had a pretty big move in the dollar this week, and just see where we finished here today. So we finished kind of 128, 128.26. So that has a big impact on everything. And so when the dollar starts moving, it puts pressure on commodities. Obviously, that's Canada related. So you get pressure up. You also have the gold wasn't as strong. So I continue to watch the dollar very closely. I do think as we move towards election, we probably continue to see weaker dollar as the talk about spending continues to ramp up. So weaker Canadian dollar, probably weaker commodities. So it's a major player in what happens next. So that US dollar is very important to watch right now.
Gotcha. Okay, so no more questions. So I think we'll wrap it up. But thanks for everybody for watching, and enjoy your, I guess we're at, what, 3 weeks left of summer till we hit yeah. So enjoy one of your remaining weekends. It's going to be a scorcher out there. So keep it cool.
That's right. You're going to be at your rinks, so that'll be nice.
Yeah, 8 games of hockey to coach this weekend in 2 days. So I'll just be in the rink, so I'll be fine.
Nice.
You got hockey tryouts going on right now.
Yep.
Right? Soccer going on. So
soccer games. Yep.
Yeah, the fall is approaching. Hopefully the kids go back to school, and we'll have almost a normal life, and then it continues on. Right?
Yeah, exactly.
After 2 years.
We'll see.
All right, everybody, have a great weekend, and
Thanks.
we'll see you next week.
Take care. Thanks.